Hello and welcome. You're watching the weekly edition of Your Trades on ET Now with me, Snehisha. Well, what a week it's been for in trade for us, and fresh record highs coming in not only for Nifty 50. You've had Sensex that hit a record high as well. Nifty Midcap has hit a record high over the course of the week. You've had Nifty FMCG and Nifty Pharma that have also hit their individual record highs. In fact, Nifty IT has also hit its record high over the course of the week. It's been a stellar trading session for us, but let's take a look at what the move has exactly been. Let's deep dive a little. And Nifty hit its record week. Bajaj Auto and Divi's Labs were the big gainers when it comes to Nifty. Nifty was up roughly 2% this week, and it's been the biggest single week of gain in the last 2 months coming in for the Nifty. Nifty Midcap also crossed that 6,000 mark for the first time this week. Biggest single weekly gain in 7 weeks also coming in for the Nifty Midcap, pardon me, 60,000 mark. You have Nifty Small Cap that closed in the green for this week. Century Textiles and Apar Industries were the big winners over there. Now, when you take a look at what all has hit record high this week, it's a big list of indices coming over there. Nifty FMCG, Nifty IT, Nifty Pharma. All of these three indices, like I mentioned earlier, have hit their individual record highs. Metal was up over 2% this week. Nifty Bank registered its biggest single week gain in the last 12 weeks. Bandhan and Axis were the two banks to watch out for in trade. You also had Realty that surprisingly closed in the green this week, because remember, Nifty Realty has been seeing some weakness coming in over the last couple of weeks of trade. DLF and SOBA held on pretty smartly. You also had a brokerage note on DLF that came in, so that aided the stock and the overall sector as well. PSU Bank snapped its 2-week losing streak, so you also had another candidate closing in the green today. IOB, Canara Bank were the ones that were leading and cheering the PSU Bank index. Nifty Auto was up roughly 1% this week. Bajaj Auto and Bosch led all the gains. But while we've taken a look at what the indices did, let's also take a look at some other important news flow that came in over the course of the week. Your Amphi data and SIP inflows had topped 23,500 crores for the first time, showing the resilience that still exists in the market when it comes to retail investors. You also had government that approved the PM E-Drive scheme with 10,900 crores of investment, which means the entire electric vehicles and the auto sector was abuzz in trade. You had Bajaj Housing Finance IPO that was subscribed 64 times, listing happening next week. It's going to be a highly anticipated IPO to watch out for. August CPI inflation has been the second lowest in the last 5 years at 3.65%. So that was one major data point that came in for our markets over the course of the week. And of course, when you take a look at inflation, let's talk about central bank action, because you had ECB in the European Union that cut its rate by 25 bips, and all eyes will be on the FOMC meeting taking place on the 17th and the outcome coming in on the 18th. Next week. And well, all eyes are going to be on what Jerome Powell has to say and the rate cuts that they go ahead with. It's for sure they're going to be undertaking a rate cut, is what the street is largely expecting. Now, if it is going to be a 25 bips or a 50 bips rate cut, we'll just have to wait and watch for that. Largely, this is what the trading session has looked like over the course of the week. It's been an interesting one, but let's take the discussion ahead and talk about the moves we've seen and what we can expect going into trade next week. Let me welcome on board our two guests joining us today. We have Rajesh Palviya, Head Technical and Derivative Research at Axis Securities, and along with that, Mr. Ajay Bagga, Chairman of Elements Platform and Market Expert. Gentlemen, thank you so much for taking the time out and joining me on the show today. Rajesh, I'm going to come to you first. Give us a technical sense of the moves that we've seen over the week, because the first three trading sessions rather tempered. Today again was rather tempered, but Thursday is when we hit a fresh all-time high. Very sharp move coming in just the last few hours of the trading session. Do you think this was just a one-time wonder coming in for the market, or going into next week we can expect the Nifty to stay rather buoyant?
So definitely in the Thursday move, we have seen very strong rally for Nifty and Bank Nifty, and both indices manages to cross their congestion zone. Short covering was there in both the indices. But again, in today's session also, we have witnessed that, Nifty as well as the Bank Nifty both able to hold out the strength which we have already registered for the Thursday session, as Nifty is comfortably holding about 25,300, 25,250 marks. So till these levels are intact, I think we may see furthermore follow-up buying action in coming week, and possibly Nifty may attempt to move further higher to 25,500, 550 kind of zone also, as Nifty able to cross 25, 200, 300 call concentration area. So we believe that follow-up buying action we could see in the coming week for Nifty, and possible target as we speak 25, 550 we could see. For Bank Nifty, there is a outperformance, almost 2.6% gain for week. And the way Bank Nifty has formed a bullish candle on a weekly chart and comfortably holding above 51,500. So we believe that here also we could see follow-up buying action. Lot many private banks have already shown strength in the last couple of days, and we have already witnessed a breakout in most of the large cap private bank on the near-term structure. So we do believe that here also we could see follow-up buying action, and possible target for Bank Nifty we may see towards 52,400 to 52,600. At this juncture, we are placing our stop loss at around 51,600 to hold long position.
Thank you so much for that view coming in. Those are the crucial levels to watch out for. Mr. Bagga, thank you so much for joining us. I have my next question for you. Before we talk about sectors, before we get stock specific, I want to get a global view from you, because who better than you to get that? Give us a sense of what we can expect going into next week in terms of the FOMC meeting. And see, a rate cut is largely what is penciled in. Are you hoping for, or are you expecting a 25 bips cut? Are you looking ahead at a 50 bips cut, and what impact does that have for us back home?
Yeah, we are expecting a 25 basis point cut because the Fed did not act in July. So they would not like to, send out some panic mode kind of indicators by cutting 50 in one go. Second, they would not like to say that July they missed any bus. So it will be a very standard rate cut that they start with, and they have a chance in November and December to make up if the economy is showing any weakness or if it's anything other than a soft landing. If you look at the global macro, we have a China slowdown, but it is still in the growth mode, but slowing. We have Japan, which is doing better than anticipated, and we have Europe, which is again on the slowdown and near to stall mode. So clearly, the US economy is not very correlated right now with the rest of the world. It's an economy growing at 2.5%. So Fed will have a lot of time to cut rates. They won't be in a hurry, is our thesis. So probably 25 basis points each in September, November, and December is what we will see. Of course, if the trends start showing stronger than a soft landing in the US, then you could see higher rate cuts. But this meeting on Wednesday, probably you will see a 25 basis points cut. What does that mean? It means more emerging market flows. It means a weaker dollar, a stronger gold level, and next to gold, I think silver is in a catch-up mode. You will see silver also rallying quite strongly. Those are the cues. But India benefits from stronger emerging market flows. Has it already started with the last 5 days of FI positive numbers coming in? We'll have to wait and watch. But normally, with the Fed rate cut cycle starting, emerging market flows tend to increase. And India being a big part of the MSCI EM index now, and China being weak, I think India could get a big chunk, nearly 20% of those flows coming into our markets.
Okay, wow, that's really good to know. Thanks for that view coming in. And Rajesh, I want to discuss a trend that we've seen in the AMFI data that's come this time around. Now, if you see, the mid-cap, small-cap schemes have regained strong flows after 3 months. At the same time, you have strong support being seen towards the large-cap schemes as well. So, amid a market like this, that, on one day it's reaching record highs, and then we're tempered, of course, the next day. What is your strategy? What strategy would you suggest our viewers going ahead? Because do you think mid cap, small cap is now a safe space to go into, or would you still place your bets on the large caps?
So, looking at the broader market, we are in bull market, and most of the indices are showing uptrend across all time frame. I think in this kind of scenario, generally mid cap and small cap space always attract buying interest from the investors. So I think, and looking at the Nifty mid cap structure, it's continuously moving in upsloping channel on a weekly as well as on the monthly chart. That clearly indicates there is a sustained buying action is taking place. Whatever dips we are getting on a near-term, short-term structure are attracting the buying interest and comfortably holding about to their short to medium term moving averages. So we believe that yes, mid cap space may continue further as almost benchmark indices are also at all-time high trajectory. So I think confidence and comfort is there on the street. So we believe that when you have these kind of scenario of market, I think mid cap may generally outperform. So we see Nifty mid cap may scale up further to that level of 61,000, 61,500 in the continuation of this up move. At this juncture, one should keep an eye on 58,000, 58,900 kind of level to keep their stop loss to hold their long position. Even Nifty small cap may also exhibit good amount of rally in coming week. So I think yes, one can continue to hold their mid cap and small cap, and when you get any opportunity in volatile market, you can deploy furthermore your investment bets on the quality mid cap and small cap space also.
Okay, thanks for the view coming in. But on that note, Rajesh and Mr. Bagga stay on with us. So we'll slip into a very short break. We'll be right back to talk about the week that went by and what to expect going into next week. Right after this short break, you stay tuned. Hello there, good to have you back on Your Trades. Let's keep the discussion going with Rajesh Palviya and Mr. Ajay Bagga as well. Mr. Bagga, my question to you now is, if you take a look at the sectoral gainers on a weekly basis, you have IT and FMCG right at the top. So do you think it's time that these defensives came into play? It's about time that we've seen these moves on both of these defensive counters. And do you think defensive is the way to go ahead now?
I think three trends are coming out very clearly. One is the global impact of the Fed rate cut, and ECB is already easing. Bank of Japan is in a catch-up mode. China is easing. So overall, the world is easing interest rates. What does that mean? That the banks are anticipating a slowdown globally. In that kind of a scenario, you normally go into defensives and you go into domestics. So I would say first counters, the first sector one can look at is financials. Here again, the wholesale funded companies will get the bigger push as the RBI also goes into rate cuts. Our thesis is that the RBI will cut about 75 to 100 basis points in the next 12 to 14 months. So we are seeing rate cuts following up in India as well because the economy is being restrained by real rates being quite high. So that's one. Second big thing that's coming through is the rural economy and the rural demand picking up after 4 years of very sluggish performance. So expectation is as the festive season has started with the Ganpati festival, we are expecting rural demand to pick up, and as the harvest comes in next month, we will get clearer signals. But the FMCG players, the two-wheelers, the tractor players are already signaling this coming back. So rural demand is the second part. And third will be the sheer domestics like auto, like banks, and real estate. I think these will do well. Telecom is a repricing game. Tariffs are being increased, so telecom you will see repricing happening there. And pharma and IT in terms of the defensives. I think within that, pharma is looking more attractive. IT has run up a lot and valuations are strong. Given it's a presidential year, a presidential election year in the US, you might have a little slowdown in new order flow, and which could pick up from next February onwards. So in that scenario, pharma might do better. for the next 6 months than IT.
Okay, so pharma versus IT, and pharma taking the clear run up ahead for Mr. Bagga. But Rajesh, I believe you have some stock specific strategies going into next week that you would like to share with our viewers. So, what are the stocks that you are watching out for?
Definitely. So the first stock is from real estate space. We have witnessed short covering action in most of the real estate space, and most of the stocks have done well in last couple of days. Looking at the structure for real estate, we believe that DLF can be looked at current level. The way stock managed to give breakout of previous swing high, and stock is comfortably holding about to 20-day, 50-day moving average now after this close. So we expect DLF may extend its gain towards 888. So DLF is buy with stop loss of 845. Second stock that we like is Voltas, continuity of uptrend. This is the fifth consecutive week where stock is making higher high low formation. So very strong buying action is taking place in Voltas. And the way stock is moving in upsloping channel, we believe that here we could see furthermore buying action, follow buying action in the coming week. Voltas can be a buy for upside target of 1975. Stop loss should be placed at around 1895. And the third stock is from NBFC space, that is L&D Finance. Here we witness a 5-week consolidation breakout in derivative data. Short covering was there. Looking at the breakout on the chart, we do expect that furthermore follow-up buying action we could see, and possible target towards 186 we could see in the coming week. So L&T Finance is buy with stop loss of 174.
Calls coming in from real estate, consumption, and NBFCs, DLF, Voltas, and LTF, respectively. Thank you so much, Rajesh, for that. On that note, gentlemen, I will let you go. Thank you so much for joining us on the show and taking the time to speak to us. But well, let's keep it going with all the discussion. After a dull few months of demand, Motown is gearing up for a robust festive season. They're also seeing green shoots in rural demand. Listen into two of the biggest players, Maruti Suzuki and TVS Motor, on the road ahead.
In terms of retail, it's going pretty okay. And we are trying to maintain a very healthy network stock across the country. And we feel with the festival time, the type of response which you are saying, be in terms of the Kerala first month, August, and even during the Ganesh Chaturthi also, which first day was Saturday, we saw a very good traction in terms of the deliveries. There was almost a 10% increase in the deliveries. So my take is this, that festival time we are going to see green shoots coming.
See, we have excellent range, and we are pretty confident that we will do better than the industry. And industry is also doing extremely well. If you look at the Vahan, the last 5 months, more than 12% growth. We have a very strong R&D team. So, as you know, customers are really agnostic about the technology. And we have every capability to deliver. So we will look at it appropriate, what is important to the customer. First time we are seeing rural slightly ahead of urban. It's a good news for all of us.
Okay, then let's just focus from autos to pharma. And remember, just a few minutes ago, Mr. Bagga also told us that pharma is poised for a big up move. According to him, should do well for the next 6 months. And this sentiment is also being echoed by Atul Suri of Marathon Trends PMS. Let's go across and listen into what he had to say about the space and why he is so bullish about the pharma sector.
We've been able to clip off a good 15%, and our weightage has increased dramatically to pharma. We feel that pharma is one sector that has been ignored for many, many years, and there's a lot of improvement in their performance, in the overall. They've been able to clean up the house for them, and we feel that pharma is actually getting poised for a very, very big up move. So we find a major allocation has gone into pharma and FMCG. I also get a sense by looking at the market that the whole rural theme is playing out. You can also see it between four-wheelers to two-wheelers, that the government post-elections has had a bit of a reality check, and they feel the need that there is rural distress. They need to remedy that. So the feeling is that a lot more money is going to flow in there. Plus, we've had a fantastic monsoon. So you're having record sowing. So the output is that you may have an excellent, excellent harvest. So I do think that the market is moving towards the rural driven themes. That is why, when we talk of FMCG and stuff like that, you will find that they're doing very well. Some of the fertilizer stocks are doing very well. So I feel the market's moving on a bigger play from a risk on to a bit of a risk off mode.
Okay, that's the word coming in from Atul Suri. But on that note, I'm afraid we're completely timed out on this week's edition of Your Trade. From everybody that put this show together, thank you so much for watching. Stay tuned to ET Now for more news and updates.